So banks in India are regulated by Banking Regulation Act 1949. And Section 5B, it talks about the word banking, which refers to the main core business of banks is accepting deposits for the purpose of lending or investment. So that is why they clearly demarcate companies who accept. There may be some, limited companies, listed companies who will accept deposits, public deposits, but those public deposits are used with respect to their company's operations, business operations. So that is why they are clearly out of the scope of banking. So banking refers to accepting deposits for the purpose of lending or investment, and Section 5C covers the banking companies. Okay, so bank is a commercial institution licensed to accept deposits and acts as a safe custodian of the spendable funds of its customers. So for banks, the customers are those who deposit money or transact with the bank in any form. Okay, so they are called clients or customers. Now, what is the restriction on the business of banking companies? Few sections are discussed here. Section 8, Section 11, Section 15. Few sections are discussed considering the order of importance. The same thing are given in your materials also. So what are the restrictions provided? So there is a restriction with respect to goods, okay, dealing with goods. That is twofold. One is dealing with the goods, meaning there is a restriction or a bar on dealing with buy or sell, trading or buying and selling of or even bartering of goods. There is an exception to it. So in certain cases, the banks may, have certain goods as security. For example, a company, trading company or manufacturing company is seeking a loan. So from a bank. So that will hypothecate the inventory. So the loan will be given on inventory. So considering the, so it is more like, a security. If the client is unable to repay the loan, they will hypothecate or they will take that inventory to them and they will sell and realize the money. So this is one exception. I'm just giving it as an example. So this is one exception for the banks to deal with goods. Next one is dealing with other goods, meaning bar on engaging in any trade or buy or sell of goods for others. So on behalf of anyone else, bank cannot do that. So again, the exception is bills of exchange received for collection on behalf of its customers. So where the banks discount the bills, okay, so that it becomes the bills receivable. So the bank will get into the collection of that bill. So this is one of the services provided by the bank. So this is given as an exception. This bank can do. Then non-banking assets. So Section 9 deals with the non-banking assets. There are certain exceptions and restrictions given to it. So banking, a bank cannot acquire any immovable property, but it can lend against security of such assets. Okay. So generally, so ideally what they are trying to say is bank has to be a bank. It cannot enter into any other transaction or any other business to deal with goods or to deal with, purchase or sale of intangibles or tangible assets, all that. So, but they have given separate sections to deal with. So here, what is the exception? So for the purpose of using such immovable property for carrying on its own business operations. Okay, so that is given as an exception. And default in case of any default in loan repayment, it can take the physical possession of an asset. Similar to inventory, what I told, goods or this on a madri, asset also, building, either or factory, they will take it in case of loan default. Then what is the time limit for disposal? So okay, assuming they have taken the possession of an asset. Okay, so what is the disposal time limit? So within 7 years from the date of acquisition or period extended by RBI. So bank nale vandu RBI will come into picture in a lot of cases. So RBI will notify, RBI will issue directions. RBI ஓட follow பண்ணும் bank. Just connect in my Is my voice clear?
Now it's clear, ma'am.
முன்னாடி கொஞ்சம் பிரச்சனை இருந்ததோ?
Yes, ma'am.
Yes, yeah, I think now it is fine. I don't know, there's some problem with my home internet. Maybe for some time I'll switch off the video. That's why it's buffering. Yeah. Hi, Swati.
Yes, ma'am.
Yeah, Swati, last class you were able to do the presentation, no?
Yes, ma'am. Last two classes I didn't see the classes recordings, ma'am. So I was not able to join.
Okay, okay, fine. But anyway, P&L balance sheet you could have attended if possible, maybe. But
Okay, ma'am.
recording part note illa. But that's
Okay.
okay.
Okay, ma'am.
So please follow that, okay? Anyway,
Yes,
இதுக்கப்புறம்
ma'am.
நம்ம பண்ண முடியுமா தெரியல, but just follow what others have done, and I would have given some value additions on the pointers. So
Okay, okay, ma'am. Okay, ma'am.
yeah. So just a minute. Yes. So next one is, yeah, this one will be appearing in your old syllabus book, but I thought this is this is specifically, I don't know why it is not given in the new syllabus, but I think this we need to know. Okay. So there is a minimum paid up capital and reserve requirement given by section 11. So what it says, it actually bifurcates this into two. One is, banking company incorporated outside India and in India. So with respect to the banking companies incorporated outside India, and when the place of business is Kolkata or Mumbai or both, okay, then the aggregate minimum value of paid up capital and reserves should be 20 lakhs. In case of other cities other than Kolkata or Mumbai, then it should be 15 lakhs. Okay. And then next one is for the banks incorporated in India. So the place of business in more than one state, including Mumbai or Kolkata, then it should be minimum 10 lakhs. In case all its place of business is in one state and none in Mumbai or Kolkata, just one state, but it's not in Mumbai or Kolkata, but in the same state, it could be in many places, many cities or districts. In that case, there is a accumulation. First is rupees 1 lakh plus 10,000 of each such branch as it is appearing in any district. Say 10 districts, 10 into 10,000. So another 1 lakh. And then plus 25,000 outside the district. So and the district, in the district, say, for example, in the entire state of Tamil Nadu, we will take Chennai as one district. Okay. So Chennai, they have in 10 places. So for Tamil Nadu, it is 1 lakh plus 10,000 multiplied by 10, 1 lakh. And then outside this Chennai, say Trichy or Coimbatore, they have, say, two centers, two branches. So then 25,000 multiplied by 2, 50,000. So it will be 2,50,000 minimum. In case this for this particular outside district, if you have, say, 30 places also, it should be restricted only to 5 lakhs. So why I said 30, not 30 actually. Yeah, 20, 40. 40க்கு மேல இருந்தா கூட, ஏன்னா per இது வந்து 25,000னா வந்து up to 10 வந்து it will be 2.5, then another 20. So 20 district, 20 places இருந்ததுன்னா 5 lakhs. Even 25 or 30 இருந்தாலும் 5 lakhs தான். So the maximum limit given is 5 lakhs. So totally your ceiling is 5 lakhs plus 1 lakh, 6 lakhs. அது போக whatever number of districts you have to multiply. So this is the paid up capital which needs to be maintained. This may come in objective. I don't think you have any problems applying this, but it is just for your knowledge. And then restriction on payment of dividend. So it is covered by section 15 and 15(1) and 2. So here, no dividend until all its capitalized expenses have been completely written off. So until you write off the capex, the bank cannot declare dividend. So in that thing, there is some exception given. So the following need not be written off. What are they? So it is depreciation in the value of investments in approved securities. So if not capitalized or accounted as loss. So the depreciation with respect to this particular investment, even if it is lying in your books of accounts, it need not be written off. So it is given as an exception. Then depreciation in value of investments in shares or debentures or bonds if sufficient provision is made. This particular depreciation also is an exception. And one more thing is the bad debts. So if adequate provision is made. So for both these cases, provision should be made, and this provision's sufficiency should be confirmed by an auditor. So statutory auditor satisfaction should be there. So they may ask for any auditor's certificate also. So I repeat, so depreciation in value of investments in shares or debentures or bonds can be given as an exception provided sufficient provision is made in the books of accounts. Also for bad debts, if adequate provision is made in the books of accounts. But for these two cases, the requirement or the sufficiency of the provision should be confirmed by the auditor. Yes, it is sufficient. The auditor should express his satisfaction towards these two. Only then it can be given as an exception. So then, statutory reserve. So what is the minimum reserve that the bank has to maintain? So section 17 deals with it. So the minimum of 25% of profits has to be transferred to reserves fund. Profit before declare that profit, where you should apply that profit of 25%. So the profit is nothing but before declaration of any dividend. It is in with respect to I think schedule 3 financials retained earnings we will transfer it to the reserves, correct? But inge minimum we have a transfer to reserve, but this is before dividend, not after dividend. Then any appropriation from that fund, it has to be reported to RBI with the reasons, okay, within 21 days of such appropriation. So this is about transfer of reserves. Then cash reserve. So what is the cash reserve that has to be maintained? நம்ம நிறைய கேள்விப்பட்டிருப்போம்ல, CRR, அப்புறம் என்னது 2 டேர்ம் கேள்விப்படுவோம் எப்பவுமே இந்த எக்கனாமிக்ஸ்ல படிக்கும் போது நினைக்கிறேன், பேங்கிங்ஸ் பத்தி படிக்கும்போது CRR, this is compulsory cash reserve requirement or something. So CRR. So it has to be at least a percentage of its total demand and time deposits, time liabilities, deposits liabilities, as on the last Friday of the second preceding fortnight. And the percentage I think RBI will, mandate, it will prescribe. And the scheduled bank there is no requirement to maintain any CRR. Manner of maintaining CRR generally for the other banks, it has to maintain with itself, or it can maintain it as a balance in the current account with RBI, or net balance in current account, or in any or one or more of these three. So either it has to maintain by itself, or it can maintain a particular balance in the current account of RBI, or net balance in current account, or either one of these three, or combination of these three. Okay, so that is with respect to the cash reserves. Then restriction on loans and advances. So section 20 deals with it. So what is the restriction which the bank can lend? So banking company shall not advance on the security of its own shares. Okay, so these are the restrictions. So generally, when it has shares in any company, on that it cannot lend any advance. So that's a restriction. Or entering into any commitment for granting loan to any director. Okay, so director, na deal potirukadhu director. So any director or the firm where director have any interest, or company where director has shares, or any individuals with whom the director is a partner or a guarantor. So director oda related ah irukra endha vishayathukume vandu the bank cannot enter into a commitment. Okay, then bookkeeping system. So இங்க தான் நம்மளோட aspect வருது. அதுவுமே வந்து we will not deal with all these levels of bookkeeping. We will straight get into final accounts only. அதுக்கு முன்னாடி couple of concepts will be there, like interest or provisioning of non-performing assets, NPA, இந்த மாதிரியா substandard standard assets, இதெல்லாம் நம்ம முன்னாடி படிச்சிருப்போம். So these things we will deal with for minimum marks, like 3 markers வந்து you may get that. But இதெல்லாம் வந்து just to know for your understanding தான். Okay, for theoretical purposes. So this has got nothing to do with our accounting as such. So what are the book system? So unlike companies, banks வந்து கொஞ்சம் extra ledgers or books இருக்கும். So first வந்து voucher posting. So document based on they will create a document. அதுதான் voucher. இப்ப tallyல இருக்கு அப்படின்னா அதுல வந்து என்ட்ரி போடுறதே வந்து it's a voucher தான், journal voucher அப்படின்னு சொல்லுவோம். So voucher posting has to be done. Then voucher summary sheet will be prepared based on the number of vouchers created. So a particular period, let's say fortnightly or monthly, end of a period, particular period, voucher summary sheet will be prepared. And then daily trial balance will be done to match the debits and credits. So trial balance just to strike a balance, whether my debits are equal to my credits. Then continuous checks will happen. So continuous checks will be done by a person who's other than a person who is actually preparing the accounts. So that will be done more like, they will have some internal audit team. உள்ளுக்குள்ளேயே ஏதாவது அவங்கள எம்ப்ளாயீஸே வந்து ஆடிட் மாதிரி பண்ணுவாங்க. And then control accounts. Control accounts வந்து it is more like a trial balance of detailed personal ledger. That's what they have actually given. So control accounts நாலே வந்து it is to check. That is why it is said as trial balance. So the duty of trial balance is to check whether the debits are equal to credits. So control accounts also will do that. So ideally, control accounting it is more like a basket in between two accounts. So for a time being, the balances will be parked, and then it will be moved to the account. So all at the end of any period, the control account should be nil. எப்பவுமே அப்படிதான். So the contra entries, இதெல்லாம் நல்ல example. And shares chapterல if you recollect, when we put entries for allotment, shares allotment லாம் வந்து நம்ம வந்து ஒரு due create பண்ணிட்டு then once the due comes we will cancel that, right? So அந்த மாதிரி share allotment accountங்கிறது வந்து ஒரு control account மாதிரி நம்ம யூஸ் பண்ணுவோம். I would have given a reference then also, like it's a control account அப்படின்னு சொல்லியிருப்பேன். So control account purpose அதுதான். It is lying in between two accounts as a bucket. So relating to this account will stay here for some time until it goes to the next account. So once it goes to the next account, this basket becomes empty. So this is kind of a reference or relevance which I learned during my CA days. So I thought I'll share. And then double voucher system. Double voucher system is nothing but your debit or credit voucher. Especially it's more like journal voucher. Journal voucher it will not have any payment cash dealings, cash account illama irukadhu. So journal vouchers madri. So double voucher is nothing but your debit and credit voucher. So these are the this is the flow of recording of transaction happens in a... Yes, ma'am. Yeah.
Your voice is breaking, ma'am.
Oh, but my Wi-Fi is full. I don't know why. Okay, where should I repeat?
It's clear for us.
Double voucher, were you able to hear?
Yes, ma'am. Now it's clear, ma'am.
Yeah, now it's clear. Okay, I'll repeat double voucher system. Double voucher system is like a journal voucher where cash transactions will not appear. So it is more like dealing with one debit and one credit voucher. Okay, so this is the flow of events with respect to recording of transactions in a banking system. Now we will see what is the books of accounts that are maintained. So it will be slightly differently named. The nomenclature will be different, but the features or the nature will be similar to our usual financial statements of companies. So it is broken down into major 5 heads, I think: principal, subsidiary, subsidiary register, memorandum, and then statistical. So these are the five broad categories of books of accounts. First is principal books of accounts. So it facilitates 2 things. One is general ledger and P&L ledger. So general ledger, it will have all the items like assets, liabilities, or the ellame, it will be there. So at the end, it will facilitate a bank to prepare a balance sheet. Similarly, P&L ledger will have all income and expenditure related items. So it will facilitate the bank to prepare a profit and loss account at the end of the period. So this is the principle, that is the topmost. Okay, we have 2 breakups. So similar to your financial statements. Then subsidiary books, like how we have in our company accounts, we have all subsidiary books like purchase ledger, cash ledger, not cash, purchase ledger, sales ledger, purchase returns, sales returns. This is subsidiary books. So we have now 2. One is personal ledgers and bill registers. Personal ledgers will have like current account, savings bank account, fixed deposits, your loans, your overdraft, your cash credit, customer acceptances. This is personal ledger. Bill register, it will have your inward and outward bill register, bills discounted, and purchase register. So this is their subsidiary book. So subsidiary books அதாவது bookkeeping first record பண்றதுல இருந்து it will go to subsidiary books. Subsidiary books it will go to principal books of accounts. So to giving an input to the subsidiary books will be your journal, your other ledgers, and your subsidiary registers, or some other bill registers which you have. இதெல்லாமே அந்தந்த டிபார்ட்மெண்ட் prepare பண்ற journals, all these will be an input to your subsidiary books. From subsidiary books, it will go to your principal accounts. Similarly, we have seen in company accounts. So company accounts or general sole proprietor partnership financial statements so accounting process so we will record entries in journal, and then we'll post it, ledger posting, and then it will be secondary books will be subsidiary books, and from subsidiary books it will be classified and provided. It will be prepared in a form of a trial balance, and from trial balance you will prepare P&L and balance sheet. This is the process. Same thing, similar thing we have in banks also, just that they have given different names. And then subsidiary registers, we have demand draft related, and telegraphic transfer, letter of credit, letter of guarantee, the letter of credit or the demand draft with respect to what the bank has issued and what it has received on. So those will be registered in your subsidiary registers. And then comes your memorandum books. Memorandum books will be given by multiple departments in the bank. So departmental journals will be a summary of all the departmental journals, and cash department will give their dealings, cash dealings, and then clearing department, loans and OD, deposits department, establishment department, general. They will prepare internally, their day-to-day transactions. Those will get transferred to your department journals and become a summary, and then this will be an input to your subsidiary books. Then finally, statistical books. So any statistics which the bank is preparing or based on any mandate it is preparing, that will be finding a place in the statistical books. So this is this is somewhat books which are maintained, but for our working purposes, we will deal with P&L and balance sheet and the related schedule.